again, you're welcome. I'll be showing us briefly the second part of this price action or the trend, and in this I will also be addressing some questions or reviews that I've received over time after the first video, because some have been asking me what is the perfect opportunity. How can we know the perfect opportunity? So I'll be addressing that right on this video as well. All right, so you can see this, so the perfect opportunity that you have, let me start from there. All right, okay, good. Anytime you have something like this, now you can see the red. Now if you look at my indicator window 1, this is my indicator window 1. All right, so if you look at my indicator window 1, you can see clearly that this red that you have here jumped up massively. So anytime there is a major jump like this is a major jump, this one here is a major jump, while this second one is a minor jump. All right, so anytime you have this major jump, it is a good time. In fact, it is not just a good time, it is a perfect time to enter the trade. Anytime you have this. And remember, I said I was going to answer the question of what do you do when you enter for a perfect opportunity and yet there is a spike. If there is a spike for every perfect opportunity, the market must return back. That is why it is known as perfect opportunity. And even picking this opportunity will actually help you best on boom 1000. If you use this and you're a victim in any way, the market must return back. And actually, if you have much capital on trading synthetic, you won't be talking of any loss at all. You won't be talking of any loss if you take perfect opportunities. You won't be talking of any loss at all. Now, that is one perfect opportunity. All right, so you can see there is another jump here. Now you can see, and after that, you can take 2-3 candles. You can see, so 2-3 candles, you take that and then you're out, you rest. Anytime there is a perfect jump, okay, good. Now you can see there was a major jump here, and the perfect opportunity I'm actually referring to are actually opportunities whereby there is no spike. For instance, if you look at where this jump occurs here, and then when you trace it up, you will notice that on these 2 lines, you can see this is the line. There were actually no spikes above. So I'm not talking of a jump where you have spikes. No, it's a jump that occurs, and it has to be a major jump. Actually, this one is a minor jump per se, but at least if you notice here, you still have like 3 candles. So, but then at least 2-3, just as I said. Okay, so these are all good opportunities. All right, there is a minor jump here as well. Now you can see this minor jump, and if you trace it up, there is no spike above. So which means it's a good opportunity because the jump was not that massive, but yet you'll still find some of those cases being very good. You can go ahead and check for yourself and then see once you have a massive jump, though you always have this massive jump at least 2 to 4 times in a day. Sometimes up to 5, 6, 7, but at least, okay, now look at this. You can see this major jump here. You can see this. If you look at the top, there was no spike. If you check here, there was no spike. So you still have 3, 4, 5, 3, 4 candles. You have 4 candles even before the spike. You have 4 candles before the spike. So is this something awesome? Is this something very massive? Take advantage of that. Now we've seen I think 3 so far for today, and this is actually an up and down trend kind of market. So we've seen 3 so far today. So these are actually perfect opportunities, and the advantage of taking perfect opportunities is just very simple. This is another one for today. If you trace it up, you'll see that 3, 4, 4 again. You can see at least now this is where today started from. So it will show you that yes, now if you look at this one, there is a jump here, but the jump occurred together with spike, so you don't bother with those ones. You don't bother about those ones. All right, so that is how it is. You always have sometimes 4 to even 7 opportunities in a day. So those are perfect opportunities, and you will know that anytime you take those perfect opportunities and there is a spike, the market must, even if it likes, let it be 2 spikes up, it must always return back. It must. But in most of the cases, you won't even find a spike. But even if you entered for a very perfect opportunity and there's a spike, it must return down. It must. All right. So that is it for perfect opportunity. And anytime you enter for an opportunity, either good or perfect or whatever, and then you are expecting the market to retrace back, but for perfect opportunities, you always know that the market will return back. Even without me even looking at the trend, the market will always return back. But if you notice that the market is trending up, don't always take, if you enter for a perfect opportunity, don't always take more than 2, 3 candles. But if you know that the market is trending down, then you can take up to even 10 candles comfortably, because you know that even if there's a spike, the market will return back and still continue downward. So that is what you do anytime you have a spike that way. All right, so another thing you do is when you have a spike is always, if you are doing a short trade or scalping, all you need to do again is just to allow the market return back to your entry point. So once it returns back to entry point, you don't need to even wait for it to enter profit. And that's a mistake people make again, in order to control. Maybe once there's a spike, you think, okay, the market will return back and still give you profit. Most of the time, if the trend is against you, it doesn't always work. But for perfect opportunity, the market will always come back down to that entry position. At least it will always come back to the entry position, but immediately gets to your entry level, just take it out. At least you didn't lose, you didn't make anything, but your capital is still safe when you enter for perfect opportunities. So you can go ahead and check this. And another way you can be profitable as a trader is you must always trade aggressively on demo. Don't just go live and start trading aggressively, whereas on demo you were not trading aggressively. So aggressive trading is always trading all the time. Like for instance, you went live, you want to trade all the time, take all the opportunities available, but you were not doing the same on demo. Probably in a day, you just took 2 trades in a day. And then when you go live, you tend to take or the trade, wanting to enter the market all the time. So do not do that, because if you do that, you won't really learn how the market really works. You won't really, because for now the trend is reversing up, just as you can see. So if I'm not trading at this time, probably I traded in the afternoon while the trend was going down, and when I go live, I'm trying to take all the trades without even checking what is happening. um, Definitely I would be a victim. So if you want to go with perfect opportunities, you can do that and you'll be good. But if you want to take risk by using the trend, and actually if you use the trend, you actually be making something good, because you know when, like now, the market will still go up. The market will still go up a little more. So if I'm to go with the trend now, I'm actually supposed to buy at least, though the market still has a tendency of coming down to this level. But then currently there is a high tendency. Now you can see the 12503 mark that I drew here. The market has higher tendency of getting there than coming back. So before it comes down to this level, it must first go up. It must. So you always check higher time frame to see market formation. To see, I've dealt with that on the first part. You can see the way the market was today. You can see, and there is something that actually happened, which means if you follow the trend very well today, you would have been good. Now you can see this, the same pattern, the same pattern. So the market will rise to this level a little, and then most likely continue the downtrend. If it breaks through this particular support, it must continue down. But then for now, there's a 90% chance of a spike up again, up to this level, So, and this is just using 30 minutes time frame. I've not actually used higher time frame to see more, but using 30 minutes time frame alone, you already know where the market is likely going to go. So which means you may likely not go far to see. So 15 30 minutes time frame gave you something quite good. So this is how to just use the price action, and then this is how to enter for the best trade using the strategy that I shared before. That is how to take the best trade, so that you won't be a victim of market reversal. If you're using every other strategy, if you're not using the perfect opportunity using this strategy, then you must actually go ahead and check the trend. Every other strategy, if it is not a perfect opportunity, must be used with the trend. You must not joke with that. You mustn't joke with that. And I've also showed how to trade using the moving average 100 before now. I've showed that as well before. That is trading with moving average 100 on your main chart. I've also done that before, so you can go back to either the previous videos and then try to watch them. So let's see crash 300 and let's see what is happening. Now if you want to catch spikes on crash, now you can also use the same perfect opportunity for crash 300. Now you can see there was a jump down here. If you notice, crash is opposite of boom. There was a jump down there. But then if you want to use this on any other market, you must look at the trend so that you will not be a victim. you must look at the trend. So for now, if I was actually in the market, I would have joined this. And the reason is because the market had been ranging. If you look at this clearly, you will notice the market had been hanging within this axis for quite some time, if you can see that clearly. So which means you can do a whole lot of scalping around there, and currently using even the perfect opportunity being formed around the region where the market had been ranging. So you can see, even for criteria, I would have been able to take 1 or 2 candles. And you actually find this happening also in other times. For instance, okay, let's see where you have perfect opportunities being formed again. Good. Now you can see this as well. This is another perfect opportunity here. And now you can see the spike after that. And after the spike, you can see the market kept on coming up again. But on crash 300 is very risky if you don't use it together with the trend. Very risky. Very risky. The only way you use a perfect opportunity without looking at the trend is on boom 1000. That's because even if a spike is produced, it will always return back to give you back your capital without any issue. But if you're using it on crash or any other indices, then you must use it together with the trend. And the indicator I have under here is for catching spikes, which is my RSI, and then the envelope is for catching spikes. It's for catching spikes. For instance, when the envelope goes above to the 90 level here and crosses, you can see just as what happened here. Just as what happened here, crosses the 90 level, touches the 90 level and crosses the envelope above. You can see the market spiked down. So, though this can only be used when the trend is down. Just as you can see today, the trend had been down. If you check, now you can see this. So which means today, what you should have actually been targeting more on crash 300 is to catch spikes because of the trend, because of the way the trend had been. So it's to see how you can catch more spikes, not to make any buy mistake. All right. So if you're going to be making any buy even on this, then you have to use the trend together with a perfect opportunity if you want to buy. So this is I've already shared how to check higher time frame and how to use the trend on the part 1 in order to trade and always be profitable, because I always make mention of the fact that making little consistently is better than making more and losing, making much and losing more than you're making. For instance, you made $100 today, and then before that same day is over, you lost 120 or the same 100. So literally, you're not making any progress. It just seems you're still trading on demo. You're making it, losing it. So that's not good at all. All right. So if you're going to be using this strategy for crash 300, then you must use it with trend. And if you use it with trend, just enter at a good support level, and then you're good to go. And if you actually notice something, when you come to higher time frame, you will know where the market has actually been ranging more, and then you can take advantage of those regions. Yes, in fact, you can catch spikes at region where you know that, okay, the market had been ranging more. For instance, today, let me use 15 minutes time frame. For instance, today alone, the market had been ranging within this axis. You can see that the market started ranged within this axis. And if you check what happened before as well, in those regions, you will see that the market actually ranged. Okay, let's see. Let's be practical about this so that you will see what I'm trying to talk about. Good. Now, this is today. This is today. This is what I'm trying to show you here. For instance, I want to show you something. Now within this axis, for instance, there was so much ranging. Now if you keep tracing it back, this is 13812. 13812. Let me use higher time frame. Like 4 hours. 13812. Now good. You would see that the same thing happened before. Within this same axis, the same thing. Now something that happened today around here happened before around here too. Also happened around here. Also happened around here. So you can see what happened. So the same thing that happened today around here happened here. 1, 2, 3, 4, 5. Had actually happened before. The same thing. The same point where the market was producing multiple spikes going up and down within that same axis ranging. The same thing happened. Now currently, the reason why the market had been ranging within this axis for some time, this particular axis for some time, is also because of what happened here. If you look at this side, you will notice that the same thing actually happened there too. Let me zoom this. Good. Now you'll notice that the same thing still happened within this region, within the same region. The same thing happened within the same region. The same thing happened within here. The same thing happened within here. The same thing happened within here. So you always check most of these things before you jump in. That's if you're trading on crash or even boom, and you're using trend. You need to check where the market ranged the most, and then you can try and take advantage of that. All right, so you can see, since there was much ranging here, you can take advantage of knowing fully well that at least as the market continues ranging, you can just quickly take 2, 3, 4 candles depending on your own risk appetite. You can just take, and having a perfect opportunity formed at regions where the market ranged. So it's still something good. Just take out what you want to take and then you rest. Take 1, 2, or 3 candles and then you relax yourself. But remember, the perfect opportunity, good. Now you can see the spike down again. Why? Because this is actually a region. So though after now, I will not even bother trading again. If I am actually to be in this market trading on this crash, I would wait for the market to break out of this region completely. Because if you notice very well that the market has stayed here for some time, so I would wait for either the market to go out completely or to come down and form another support. So that is how to do it, so that you will not just keep entering the market when the market is reversing, or when the trend is changing, or as the case may be. So this is how it is done. So if there's any other update, I will just keep dropping them and adding them to the next video. So please remember the tip I gave you again. If you're practicing on the demo, make sure you practice aggressively. Try to take all the opportunities that you have in a day, because you will do the same thing when you go live. So why not do the same thing on demo? Now, the reason why people say demo and live are different is simply because of the mode. It is the same market. I've always said they are the same. If you make money on demo, you make money on live. They are all the same. The only difference is this: on your demo, you traded maybe 1, 2, 3, 4, 5 times in a day, and on live, you want to take all the opportunities available. All. You don't even want to miss one. And even when you know you're not even supposed to take anyone, you still want to enter and take risk. Whereas we are not doing that on demo. So it is the same market, not a different market. The only difference is differences in trend. Some days, probably the days you claim to make so much on demo, and then you were all selling all through that day, the trend was down. Good, you make money. Which is why if you actually follow the trend, you'll be making money on trading without really being a victim. If you are using only the trend, you'll make money from trading. Just look at when the trend starts coming down and then you follow the same one, you make your money. But then if you feel okay, you don't want to be checking the trend much, you can go ahead and use this strategy I just showed you. Take only perfect opportunities, leave the market and come back another time, so that you know that at least what you're making, because what you're really after, or what my target is, just as I've always said, is consistent profit. If you're making $20 consistently, it is better than trying to make $100 and blowing it all off. So that is how it should be done. Always trade aggressively on demo. Try to take all the opportunities available to learn, so that when you go live and you start trading aggressively, you will know that yes, you've actually mastered the art of trading aggressively, taking all the opportunities on demo. So that would help you better to understand how the market works. Because I've actually had someone trading on demo while I was on live. The same time I entered the market, he entered the market. That same day, the trend was down. So I made money that day. He made money that day on demo as well. But then you see, if I wasn't on live that day, he would have been thinking, it is demo. That is why. But I was on live, it was on demo. Made money on demo, made money on my live, he made money on his demo. If he had used live, he would have also made money. So the only differences in the market is trends. The trend can be up today, the trend can be down tomorrow. So if you were selling when the trend was down, you were making money, you were rejoicing. Now, when the trend went the opposite direction the next day, you were on live account, and then you were thinking, oh, since I made money selling on when the market was down, I should be making money selling when the market is up. No, the trend differs. So which is why it is good we all pay attention to the trend, especially if you are trading using trend and you don't want to use any of this private opportunity. You want to always trade. Now, if you want to always trade, please always make use of the trend. If you know probably you don't have the time to keep waiting for private opportunity, just look at the trend and try to follow the trend. And if you notice, okay, what is happening, you're not understanding it. If you know the kind of trend you're seeing, you don't understand it, don't even bother trading. Just relax. It is better you preserve your capital than crashing your capital. For instance, okay, good. Look at what happened even here. The market ranged within this region, and it had been ranging within this region. Let me put it on 5 minutes time frame so that I'll be able to show you that clearly. Now, if you notice, for some time the market had been ranging within here. So anytime the market gets to this level, you can always see spike taking place from time to time. So this kind of thing will likely guide you better when you are trading. You check higher time frame and see what is happening currently as well. So as it is now, if the market doesn't break through this support, automatically to continue down for some time. But then there is a tendency that the market will actually return back up before coming back down again, before coming back to break this. There is that tendency, and you still see that if you actually to watch, you will still see that happening. That's if you have to use a trend, that is what you do. So if you know you can't understand what is happening in the market, just relax and wait. Whether you like it or not, in a whole week, at least, in fact, in a whole day, there must be perfect trend for you that will favor you in a whole day. There must be either one trend or two one or two at least. Okay, you can see what happened here. The market ranged, started coming up, and then got to this point, started returning back. And when it returned down, you can see it's still almost at the same region. So which means even if you enter to catch spike around here, for instance, where the previous where the previous market started reversing from, even if you enter to catch spike, you will still have made money using trend. Good. Now you can see just what I said now has happened currently, that I told you there is going to be a spike. Now you can see the same thing that I said now just happened. So there is more likelihood that the market will go up first, even before coming down to break this level. And that's exactly what you've seen just now. So the market will always spike at regions of strong support and resistance. It is certain. So that is how you trade without taking unnecessary risk. Please, the target of teaching people how to trade is not to actually take, if possible, don't even take risk at all. And if you know that, okay, you want to be trading all the time and then probably you are missing all the perfect opportunities before you come online, look at the trend and then try and pick some profit. So if you are not going to look at the trend, don't even bother trading. Just relax until any other day you can look at the trend. Just as what you've seen now, for instance, I came online, there were no perfect opportunity except on crash 300. But then, I still had to look at the trend to be sure that yes. But imagine I came in when the thing has already been formed. So I have to look at the trend and see, to know where the market has been ranging and to know how long it has been, because you also need to know how long this has been ranging, so that either you wait for the market to break out of that place completely, or to wait for it to come down or up and then to go and form another good support and resistance before you now come in and take whatever you want to take. Because it's always better you are patient than you jump in and you lose money. It is always better. That's what I keep saying. Making little consistently is always better than making much and losing more than you're making. All right, so thank you so much for watching. If you have any question, you can drop it, and don't forget to share this video. If you need this strategy, you can always get in touch with me as well. And then if you want to join the academy, you can always let me know. All right, so that you can learn very well and stop losing money. It is possible not to lose money, but as human being, you would want to take a risk. It is also very possible to take risk, but what I'm saying in essence, in summary, is this: when you want to take the risk, check the trend. So please refer back to my video on the part 1 of the trend. This is the second part, and I've been able to address some more issues that people face even on this one. So do well to share with others that may likely want to learn and remain profitable as well in this market. Thank you very much.